The next topic that we are going to discuss is the difference between balance of trade and balance of payment. Now, we all know that balance of trade is the difference between the export of goods and import of goods. Services is not included. So, don't make the mistake. Once again, I am repeating. Balance of trade includes only visible items, no invisible items. So when a question is asked, what is balance of trade? It is a difference between export of goods and import of goods only. And if the export is more, there is surplus in the balance of trade. If export is less, there is deficit in the balance of trade. If export and import of goods are equal, we can say, if it is balanced, if it is equalized, we can say there is balance of visible trade or trade balance. Now we are going to discuss the difference between balance of trade and balance of payment. And I have told you whenever a question is asked based on the difference between any two concepts, you have to draw a table and you have to start your explanation with basis. So here in the table I have drawn 3 columns, that is basis, then balance of trade and balance of payment. Now let us see the differences one by one. Now, the first basis which I have written is on what basis we are going to differentiate them. That is what the basis means. Now, first we are going to differentiate both the terms balance of trade and balance of payment on the basis of their meaning. Now, what is meant by balance of trade? Systematic record of visible items only. Visible items, you know, goods which can be touched, which can be seen and which can be measured. Then balance of payment, but whereas balance of payment is a systematic record of all economic transactions. I told you in the balance of payment, the first item, visible item, is only included in balance of trade. So balance of trade consists only of what? The visible items. The rest of the items is concerned with balance of payment. In the balance of payment, all the 4 are there. But in balance of trade, only the first one is there, that is visible items. So the first difference on the basis of their meaning is balance of trade include only the visible items, but whereas the balance of payment includes, it is a systematic record of all the economic transactions. So once again, for your clear understanding, balance of trade include only the first component of balance of payment, that is visible items. But whereas the balance of payment includes visible items, invisible items, unilateral transfers and capital transfers. I hope it is clear to you. Now, the next one, we are going to differentiate balance of payment and balance of trade on the basis of nature of the item. Nature. Nature is balance of trade includes only visible items. Visible items. That means only goods. But whereas balance of payment includes visible items, invisible items, unilateral transfers and capital transfers. All the 4 are included in balance of payment, but only the first item is included in the balance of trade. So balance of trade is a component of balance of payment. It is an item in the balance of payment. So balance of trade includes only visible items, but whereas balance of payment includes visible, invisible, unilateral and capital transfers. All the 4 are included in the BOP, balance of payment. Next, we are going to differentiate these two on the basis of the concept. What type of a concept, whether it is a narrow concept or a wider concept. So from the differentiation, first 2 differentiation itself, you can guess what it will be. Definitely balance of trade is a narrow concept. Why it is a narrow concept? Because it is considering only the visible item, goods, only one item. But whereas Balance of payment is a wider concept. Why it is a wider concept? Because it includes visible items, invisible items, unilateral transfers and capital transfers. So balance of payment definitely is a wider concept. Next we will move on to the next basis on which it is differentiated. Next is on the basis of the nature of a record. It is a systematic record. On the basis of record, how will you differentiate both balance of payment and balance of trade? Balance of trade is an incomplete record. Why it is an incomplete record? Because it considers only, again, the same explanation, visible items. But whereas balance of payment is a complete record because it gives a full picture about all the items of the economic transactions such as capital transfers, unilateral transfers, invisible items as well as visible items. But whereas balance of trade will give an idea only about the visible items. I hope it is clear to you, and this difference between balance of trade and balance of payment should be written in a form of a table showing the basis on which you are going to differentiate them. Now we will move on to the next topic of balance of payment, which is very important from the examination point of view. Next is components of balance of payment. Components of balance of payment. Components of balance of payment. There are two main components of balance of payment. They are current account and capital account. Current account and capital account. These are the two main components of balance of payment. The first one is current account and the second one is capital account. Now let us see what all items are there in the current account and what all items are there in the capital account. Very well you can understand from the explanation which I have given now so far. All the items which are considered as, which relates to capital receipts and payment will come under capital account. So you can just imagine what all things will come under capital account. All those items which relates to capital receipt and capital payment comes under capital account. So in order to understand, you have to go back to the economic transactions which I have explained. I will write it by the side. What all are the economic transactions? What are the economic transactions in BOP? The first economic transaction is visible items. Second, this is economic transaction of BOP. To learn about the components of BOP, how many components are there? Current account and capital account. To know about the components, to know about the current account and the capital account, we need to know what are the economic transactions in the BOP, which we have already learned. So I am writing it once again. Economic transactions are visible items. Then next is invisible items. Then comes unilateral transfers. Then comes capital transfers. So these are the four main economic transactions of BOP. Now from this we have to differentiate what all comes under the current account and what all comes under the capital account. Now I have told you all those items which are related to capital receipts and capital payments. Capital receipts and capital payments comes under where? Capital account. So definitely all those items which relates to capital receipts and capital payment means obviously it is capital transfer. That comes where? Under capital account. So I am going to write capital transfers under capital account. So except this, all the other three, which are the other three? Visible items, invisible items and unilateral transfers comes under current account. So I am going to fill in the current account. So current account consists of visible items, invisible items, and unilateral transfers. I hope it is clear to you. So there are two components of balance of payment. There are two components of balance of payment. They are capital account, current account, and capital account. Capital account consists of all the capital receipts and payments which are related to economic transactions of BOP. So whenever you are asked to write about the components of balance of payment, soon you have to remember, you have to recollect what are the economic transactions of BOP. Out of the 4 economic transactions, all the transactions related to capital receipts and payments will come under capital account. The rest 3, unilateral, visible and invisible, comes under current account. So when we speak about this, what should be there in your mind? Visible items, export and import of visible items. It is very important. Again, export and import of invisible items. Again, receipts and payments of unilateral transfers. Again here, capital receipts and capital payments. This is what you have to remember when you write about the components of balance of payment. So these are the 2 main components of balance of payment. Now we will go in detailed discussion with the components of current account. In the current account, we have visible items. Once again, I am writing for the clear understanding. Invisible items, unilateral transfers. Now, the first 3 economic transactions of BOP comes under the current account. Now let us explain this. Number 1, visible items. Visible items. You know, visible item means goods. So when we write, what should be specified here? Export and import of goods. Export and import of goods. Now, when we write about export and import of goods, what all points should be written? Point number 1, regarding the export and import. Point number 1, payment for imports. Payment for imports. Payment for imports. Import means what? We are buying goods from other countries. So we have to pay for it. Payment for imports. Causes for outflow of foreign exchange. Causes outflow of foreign exchange, which can be recorded on debit side. Which can be recorded on debit side, and which is a negative aspect. Negative aspect. See, export. Payment for imports, that is outflow of foreign exchange, causes for outflow of foreign exchange, and then it will be depicted in the debit side, and it is a negative aspect or a negative side. That means why it is a negative side? Because outflow of foreign exchange. Next, one more is there. export. Export means what? We are selling the goods to other countries. So we are getting the foreign exchange, isn't it? So receipt from export. Receipt from export causes inflow of foreign exchange. I have told you, when it is inflow, it has to be credited, which will be written on the credit side, and which is a positive aspect or positive side. I hope it is clear to you. Visible items, goods means export and import of goods. Now, for imports, we will make payment because we are buying goods from other countries. So we have to make payment for the goods that we are buying. Payment for imports. When we make payment, what will happen? Our foreign exchange will be flowing outside. So payment for imports causes for outflow of foreign exchange. If it is an outflow, where will we record it? On the debit side of double entry system. And it is a negative aspect or negative side because money is flowing out. Next, receipt from export. I told you both export and import is important when you explain the balance of payment. There is no export alone or import alone cannot be recorded. Both export and import should be recorded. Then only there will be credit side as well as debit side. Then only we can call it as a balance of payment accounting. It is a double entry book system that we follow in balance of payment accounting. Now, export of goods means what? We are selling the goods to other countries. So for that we will get the foreign exchange. So when we get something, it will be written as receipt. Receipt from export is inflow of foreign exchange. When we get receipt, that means it is inflow of foreign exchange. So if it is inflow of foreign exchange, where do we record this? On the credit side. That means foreign exchange is inflowing and it is thus a positive aspect, or it is recorded on the positive side. Now, sometimes payment will be more than the receipt, or sometimes payment will be less than the receipt. That means sometimes export of goods will be more, sometimes exports of goods will be more than import of goods. That can happen. If export of goods is more than import of goods means what? Through export what we are getting? Receipt. 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 We are selling goods to other countries and for that we are getting money. Receipt is greater than import. When we are importing, that means what? We are buying goods from other countries. So therefore our money is flowing outside. So that means we are making payment. In that case, what will happen? Receipt is greater than payment. We are happy. Surplus. Surplus is there. We are happy. The same thing, opposite can happen. Sometimes export of goods can be less than import of goods. If export of goods is less than import of goods, what will happen? Receipt will be less than payment. R will be less than P. Receipt will be less than payment. We are not happy because receipt is less than payment. So all these situations can happen in a transaction. Either receipts can be bigger or receipt can be less. Either payment can be bigger or payment can be less. Sometimes there exists a condition where export of goods is equal to import of goods. That means receipt is equal to payment. That is, receipt is equal to payment. That means there is a balance between the receipt and the payment. So the balance of, therefore balance of visible export and import is called balance of trade. Therefore, balance of visible export and import is called balance of trade. The same concept which I explained when I told you about balance of trade. So thus the first component of the current account is balanced here. So if the receipt is equal to payment, if export of good is equal to import of goods, we can experience a balance of trade or a trade balance or trade of visible items. That means the first component of the current account is balanced here, if both are same. If both are not same, there is an imbalance. If these are two balanced, we have to balance it because it is based on double entry book system. So if these two are balanced, we can call it as balance of trade or trade balance. So the first item in the current account is balanced.